locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave Seymour and Nathan Amaral.
Yeah, all right, we're here.
Hold on a minute. I'm adding an order of beef and broccoli to my to my sushi tonight. I don't know
you
what's
haven't?
happening. I had like a sushi.
No, wait. Tell me, you had like a big urge for sushi as well? Is that what you were about to say?
Every Friday, sushi night in the Seymour household, baby.
Oh my gosh, it's like a ritual. Oh yeah, I got to do that. I got to start that.
You're too far away. It'll take you way too long to get here.
Well, no, I got to start it on my end.
Oh, yeah. Friday night is sushi night, and I messed her all up.
Yeah.
I'll see. Look, my wife is not flexible. All right, it's like it's so important to have the consistency of my home life.
Yeah.
But when I want my beautiful bride to be just a little bit flexible, it throws her off her game. So I'll read you the text, right?
Okay.
So at 2:21 p.m., which was what, 10 minutes ago.
10 minutes ago.
Baby, is it too late to add an order of beef with broccoli? And then I even got a little broccoli emoji that I added, I created, right?
Yeah.
And she texts back, what? With a question mark on the end of it, right? I've already ordered and paid 2 hours ago. That's her way of saying, I'm not adding anything else. I've ticked that box today. I'm not going back and doing it again.
Oh, man.
What do you say? What do I say to that? How do you say?
I don't know.
Oh, okay, sweetie.
Okay.
Sweetie.
Yeah, sweetie. I'm going to order some extra
sweetie.
broccoli.
I'm sorry.
I'm going to order. Why are you saying you're sorry? No, you just be like,
because I love her. I don't want to throw her off again.
No, but you just say, oh, okay, no problem, sweetie. I'm going to order some extra broccoli. It's going to come in a different, a second order's coming in.
No, you're not listening to me either, Nathan. I don't want extra broccoli. I want to order a beef and broccoli. You know the sloppy Chinese.
Yeah, order an extra beef and broccoli. Then order an extra.
What I want.
Yeah, just order it.
Can I have what I want?
Of course, it's Friday.
Yes, I can. I'm Dave Seymour. Beef with broccoli? What the heck?
Well,
I'm changing it now.
Now you're changing it. Just add it.
I'm adding it. I didn't hit send. You asked me not to. Please order it.
Order it, yes.
Order it. Or else. No. You can't put that on there. Please order it. You can't put or else on there. You could think it.
You can think it. You can't just hit
Please
send.
Order it. Watch this. Ready?
All right.
Please order it. ...
Yeah.
I love you.
Yeah, exactly. That works.
Yeah,
With a heart.
nice.
You got a heart emoji going in there.
Put some hearts on this.
Got to throw some hearts.
Should I do the two pink ones or the
no,
one big red
just
one?
the one big red one.
Kiss?
The one with big red one really, makes an impact. Yeah.
Okay, I did it. Please order it. I love you, and then a heart on there. See?
That's the winner right there. Can't see it. There we go.
That's winner chicken dinner right there. Okay.
That's it. See,
right, cool.
Now you both get what you want.
Have we started yet?
Oh, wait. Yes, we started.
Oh, we did. I like the music.
Yeah, I know.
And by the way, first time they got to see the new video.
That's the new video. Yeah. By the way, if you guys are just joining us here for the first time, or the second time, or the fifth time, whatever, let us know what you think about our new intro video. And by the way, welcome to the Cash Flow Show. If this is your first time joining us, you could post new in the comment section, or even just say hello. Mark's already on there. He's on the fresh on the keys saying hello. There you go. And we got Darren saying hello as well.
Nice.
Yeah.
Darren. Hey, Darren. I haven't talked to you in ages. What's up, Darren?
Hey, Darren. Speaking of flexibility, though, Dave, I really appreciate your flexibility in the schedule today because it's been like one of those odd.
You know what?
You
let me down, but I was there for you, Nate.
I see.
I was there for you. So tell everybody what you were doing and why you screwed everything up and why you're not reliable. I didn't say that out loud.
No, so I don't know if it was because I just updated my computer, my Mac to the Big Sur, like the 14 whatever version, right? So
I did that.
Well, did it change your clock setting?
No, I'm in America, not in the Azores. It's beautiful here. It's still 2:33. You live in a third world country. What do you expect?
No. So like so the time got mixed up on the calendar. So I was like, I booked an appointment, which was raising money for Rotary. You're familiar with Rotary, right? Like I even got the shirt today. I even got the shirt today. You know,
You got the T-shirt. You climbed the mountain and everything. Yeah.
got the T-shirt. So we were there at the supermarket, and after I'm done here, I'm gonna go back to the market, and we're just asking people to donate, pick a few items at the grocery store to help families over on the other side of the island who really just can't afford, food for the Christmas season. So that's what we're doing.
Yeah.
So yeah.
I know a guy. I'm not going to tell you who he is.
All right.
But I know a guy at this time of year. One of his favorite things to do is to go to like Walmart.
Yeah.
And go to the layaway department. You know where folks can lay away toys for their kids for Christmas.
Right.
And he'll put up, maybe $500 or $1,000 or something,
That's
and he
really
just
cool.
leaves it there at the counter, and he says, just pay off as many layaways as you can in
That's
order
really
of whoever's next in your computer.
That's really cool.
I think stuff like that is pretty cool.
That is
right?
really cool. Yeah.
And I know this guy has a couple of younger kids, and he takes them with him, so they get to see that experience.
Mm-hmm.
We're supposed to look after each other. I know life can be a little edgy at times, but look after each other. Do the right thing, for heaven's sakes. You know. So cool. I support you, my brother.
Thanks, man. Yeah, I appreciate that. Yeah, it's just something I've always. It's a good community of people too. It's a global organization. Rotary's been around for a long time, and you meet really great people in there. And the whole idea.
Don't you wear like a red hat with a tassel on the top?
No, that's the.
And then you have the big moose ear things. Isn't that all part of that crew?
No, I want to say that's the Shriners and the Lions Club, if I know that correctly.
All right. Then you're the guys who have got like the secret squirrel handshake, where you wear like an apron and you have to knock on the door 4 times.
What?
Before you're allowed. No, that's the Masons.
That's the Masons, yeah. No.
Dude, there's so many of them out there. I just like real estate peeps. You know what I mean? That's what we should do. We should have a
club.
Yeah. What are you doing?
I got in late.
Did you just squirt cologne on yourself?
I got in late. I didn't even go to makeup. I rushed in. The producer's not, he's like out to lunch, so I'm throwing on some cologne.
What? You do realize nobody can smell you over this thing, right? We can see you. We can't smell you.
But I can smell me. Do you
stink?
I don't think I stink. I just wanted to smell good right now.
You do. I can smell it. Was that Polo? Was that Polo for men? Or was that little Ralph Lauren?
No, it's a newer thing for me. It's La Home. Ideal. La Home.
You know the one I like? I've been squirting it is John Varvatos. He's got some cologne. It's kind of
I've never heard of it.
It's kind of good.
I've actually
You've never heard of it.
Never heard of it.
Stop it.
No, let me tell you why.
That's because all you wear is Nike. That's why.
Well, that's one of the reasons. But no, the reason is I've been wearing Paco Rabanne for like 10 years, and that's the 1 million bottle. Yeah, Paco Rabanne. Yeah, that's what I've been wearing for years. So I don't know any other cologne. Then my buddy ends up wearing this, and I'm like, what is that? So here it is.
Dude, you smell good.
You smell delicious. All right.
I did an event a few years back, and when I worked a 3-day when I was educating, I relied on the cologne because
you
need a little spritzer while you're up there. You know what I mean?
Yeah, true.
That and to ward off the bad breath of 300 students all sitting next to each other for 3 days. But this one guy came up, and that was his thing, man. He was all about the cologne.
Yeah.
It was in Florida, actually. I can't remember his name, but I can remember his face. His wife was an Energizer bunny. She was an absolute sweetheart.
Yeah.
Guy was about my age, and on the 3rd day of the event, he's bringing in his own special. Little colognes.
Oh, really?
Smell this one, Dave. Smell this one, Dave. And some people really get into. Oh, hold on. There's developments.
Oh, you got an update? Okay.
Beef and broccoli front. Hold on.
Beef and broccoli update. We have a beef and broccoli update. Oh, I'm
Hold on.
coming through.
Oh boy, I messed up. Can you still hear me?
I can hear you.
Okay.
But I'm
Now you're
hearing.
coming over the speakers. Hold on a minute. Here's the update. It says, so you know, please order it. I love you. And the reply is, for who? Question mark, question mark. You want that? Question mark, question mark, question mark. I mean, I can't. What do you do now? I mean, I thought I was clear. Yes, please.
This is
Yes,
a news
please.
update. This
How's
is a
that?
breaking. This is a breaking news
Yeah.
update for beef and broccoli.
That's it. Beef and broccoli. All right, let's stop. Let's get back to business here.
Absolutely. All right.
So we got a deal of the week that came through this week, and she's redonkulous. It's a fantastic deal. I've got the PowerPoint slide here. I'm not going to go down that road, but are you still there, Nate?
I'm here. But
Oh,
I'm here.
I thought I
But
hit
I'm
the wrong
hearing.
button
I'm
there.
hearing myself on your side, just so you're aware of that.
All right, hold on a minute. Then let me fix that. See, I was mucking about with
Okay.
the thing. Hold on a second. I'm just going to mute me for 1 minute.
Okay.
Nathan, talk to everybody and tell them how wonderful you are, just for a second.
I'm gonna tell everybody how great I am. That's so weird, but we do have a question that came in, and we could go over that, and we'll do that in just a second. Let's say hello to. By the way, if you have any questions along the way too, in any of our shows, you can feel free to throw some questions in the comment section. Hello to Mark. Hello to Darren. And Darren.
All right, we fixed it.
You fixed it. Darren has a question. He says, "Let's talk. PM me. I got a question concerning a tenant. I got a 3-family in Methuen and buying another one. Just so you're aware."
Okay. Sure.
Methuen.
So what are we doing? Here's what we're doing. Let me.
What are we doing?
I want to pull up my sheet on this deal because it's a little more
Okay.
information inside of what I sent you. So
Okay.
if you can pull up what I sent you, Nathan, I'll fill in the blanks.
All right, I got it. And we're going there. Boom.
So yeah, can you see the whole thing on your screen there, Nate? It
Yeah.
looks like it's a little chopped off. You might have to slide up and down. So anyway, as you can see, it's a nice unit. We put 8 properties in contract last week in one day,
Whoa,
which
in
was
one day?
really exciting.
Just
Yeah,
one day?
yeah, one day.
That's a
Yeah,
busy
they all
day.
dropped at the same time. Yeah, all the deposits on the assets went out. We're thinking we might close all 8 of these before the end of the year.
Okay.
If not, definitely in the first month of next year. So,
Okay.
it's in action, man. There's so much going on. It's ridiculous. But this one's in the pipeline. It's in underwriting right now. It's a fantastic deal. As you can see, it's 160 units. So it's on the larger side. It's funny. We had a small asset the other week, and now we're talking about a larger asset here, 160 units. But it's a perfect story, man. 12 acres of this property. It's a
Wow.
tropical tract in Sarasota, Bradenton area. I mean, it meets our
The criteria.
larger
Hey,
city
speaking of which,
criteria.
you said Bradenton. Speaking of which, I did close the other day. I closed on the.
Correct. Congrats.
Yeah,
Well
I'm waiting
done,
for
very
you.
good.
I'm waiting for you.
Well, actually, I'm selling one this week. It's just a little single in Tampa, so we're getting out of that one.
Oh, okay.
So nice mix in this 160. It's a nice mix of 1 and 2 bed units, about 900,000 square feet per unit. Each one has its own washer dryer hookup, nice windows, patios, balconies, etc. Residents benefit really from its proximity to the employers around it. Nice school system, variety of retailers in this area. So once again, it's interesting. It doesn't matter whether it's the single family house you want to live in or whether you're playing in a bigger sandbox with us. It's really location. So what's nice about this is premium beach access. It's available within a 20-minute, 25-minute drive. So you're getting the full flavor of the Floridian marketplace. So it's super desirable area in the Gulf Coast region. Now this one was built in '96.
Okay.
So that's right where we want it to be. And a full renovation was started when the current owner took possession in 2017.
I was going to ask
Now,
you.
here's the COVID impact.
Okay.
So this owner lives in the Midwest, and multiple different businesses in the Midwest, and COVID absolutely decimated his other businesses. Cash flow. He was also on the wrong end of some of the demonstrations that happened in the Midwest earlier on this year. A lot of impact for that. And what happened is 25% of the units that were supposed to be renovated were not. And what happened is his, his palate for continuing this thing is zero. He's like, I want out, and I want out fast. Help me, right? Yeah. He just doesn't have the cash reserves now because of his other businesses taking a hit. So, they reached out to us. They know that we close, we execute on what we're doing down there. It came directly to Walter. This is one of those pocket listings that we consistently talk about.
Nice.
So as of the underwriting date, less than 50% of the units that had been improved had yet to adjust their rent to market levels.
Okay.
So there's a huge upside potential on this property. So acquisition on it, as you can see, is $8.45 million. We're going to raise an additional, or put in an additional $400,000 to complete the renovations. New market lease rate for improved units will increase by $132 a square foot. So the annual gross income on it will project out at $158,400. A lot of demand in this area. We did a feasibility study, as we tend to do. We put that money in to make sure that the demand is there. And then here's the kicker, right? So when Walter underwrote this and he had the team look at the financials, there was a 54% expense ratio on this thing. Okay. So anything over 40, 41, 42%, we see as an opportunity. And it was funny, Nate, as big as this place was, it still fit the mom and pop criteria, because what we found out was, the property management was a brother. The leasing agent was a sister, right? The salaries were way above what the market demands. And just relieving the expense pressure on this asset makes it more valuable for us.
This property,
so it's a beautiful upside play.
Yeah, this property is a little bigger than the other ones, than the, I guess I'm going to call it the normal ones, because it's whatever fits in the box, like you always say. So, this one is a lot bigger. So, are you saying that when you mentioned here the less than 50% of improved units, so like occupancy, is it at 50%, or how much occupancy?
That's a great question. So occupancy is at 75%.
Okay.
Reason being is the other 25% need to be finished on the rehab, right? Okay. So we'll finish the extra 25% of the units and bring them all up, so that leaves 75%, and 50% of the 75 that was rehabbed did not incur a rent increase up to market value. Right. So there's such a big upside potential to this, and then also the addressing the large expense side of the ratio makes it incredibly valuable to us. We'll get it around 40% expense to income ratio on this thing. Okay. So for an investor looking to put capital into the fund, here's what it looks like, right? These are the targeted returns on this. So cash on cash on this asset is 11.75 year one, scaling up to 17.57 year 5. The internal rate of return, and we cover this every week, is the value of the money working year over year for that 5-6 year period of time. 23.8, right? 23.08%. And then the equity multiple is a 2.1. So, these deals are out there. It's interesting. I've been spending a little more time in the LinkedIn environment recently, and they're beginning to see
you and me both. That's interesting.
Yeah. Interesting. Folks are beginning to see the quality of the assets that come through our lead gen pipeline. And the question I'm consistently getting is where are you finding those deals? It's funny, like Tampa all of a sudden isn't a secret anymore, right? but we still have yet to have competition. And the reason being is because as all the investors from elsewhere in the country start coming into our marketplace, they don't have a 20+ year track record in that marketplace with developers, property managers, banks, right? Contractors, et cetera, et cetera. So, we're getting the pocket listings, and, we're getting to that point where, the income or the inbound flow of assets, it's almost superseding the capital deployment. So, that's the stuff that keeps me awake at night, is knowing that a good deal is hanging around there, and I got to execute on it. So,
well, let's talk about who these deals are for. Let's talk about who these deals are for. Like, what's the type of investor that would be investing in projects like this?
What's interesting? A week ago, I would have said to you, it's primarily for a what we call a retail investor, right? And a retail investor would be the, how shall I put it? My age group, maybe looking to retire, looking to work their capital a high rate of return, to get to the retirement finish line. And what that really looks like is what we call an accredited investor, right? Individual earns $200,000 a year or more as an individual, or as a couple or family unit, 300 or $1 million in net worth, not including primary residence. Which is funny, when you say it, it sounds like a lot, but you'll be amazed at how many people meet that threshold when you start looking at retirement accounts. And,
true.
Life insurance policies, that kind of stuff. But anyway, I would have told you that a week ago. This past week, we've started to get on the radar of some smaller institutions, and we're in talks right now with a couple of different groups to potentially take out our first fund with one or two different investment groups. And when I say take out our first fund, that's the $100 million raise. So that's kind of exciting. And what's interesting, we had this discussion this week as well, $100 million raise. Well, what is that? What does that look like? Well, with our business structure, $100 million gives us about $286 million in buying power, because we don't over leverage, right? It gives us approximately, we're in the region of 24 complexes, giving us around, 20, I would say 22 to 2,800 doors, if you will, in that area. And then the cash flow, the projected cash flow when maxed out and the tank is full, projected cash flow, and that's around 52 million a year. So it's excessive. It's very robust. It's definitely I think it's a more interesting world in which to play.
Yeah, and I'll tell you what, saying those numbers, for most people would be like daunting, right? They're like, oh my gosh, that's way too big for me. But let's talk about the beauty of the fund and working with you guys, right? Let's talk about that, because you got, how do you eat an elephant? One bite at a time. And a lot of people they want to be inside of this type of real estate, but they don't know how, or they think it's like all by themselves or too daunting. So what kind of, what would be a good suggestion or recommendation for someone who's, thinking about maybe moving out of an IRA into something like this?
No, those are great questions, Nate. And it's all around, being an active investor or a passive investor, right? Do you want to deal with tenants, toilets, trash, termites, et cetera, right? And if that's your game, then great, play it. I mean, you and I have played that game for decades combined, right? Walter's been playing that game for over 30 years. But the majority don't have the time, the knowledge, or the awareness of how to even locate deals like this. So it's always been what we call a barrier to entry, right? And the barrier entry has always been, well, where do I find these deals? Then the barrier to entry is, if I do find one, what the heck do I even do with it? A third barrier entry is, how many millions and millions of dollars do I need to buy it? Because most people don't have that, right? So how do you eliminate those three barriers to entry? You eliminate it by doing what we did, which was to put together a private equity fund. And think of it as, together we are strong, right? Individually we are weak. So we combine all of our financial depth as a group to be able to take these down. So our investors are investing a minimum of $100,000, but they're looking to get targeted double-digit returns through our methodology, through our business model, right? So we target 10 to 14% cash-on-cash quarterly distributions for our investors. And then you saw on the deal of the week there, right? It's 20% plus is what we target over the life of the capital working. So that's roll it out of somewhere into somewhere. I did a really great podcast with a financial advisor out of Houston, Texas, a very cool guy by the name of Tom Kennedy. And, he's been a financial advisor for, a very long time. And I'm beginning to get a lot of inbound calls from these financial advisors because they're now saying, my clients want some workhorse. They want a Clydesdale in their portfolio, right? And commercial real estate has been that Clydesdale. So, it's interesting to watch how.
And compared to what though? Like what products do they have that it's not working for them that makes it,
no, that's
yours
good stuff.
attractive?
You know what it is? The comparison is really apples to oranges, right? Stock market, bonds, all of the familiars that most people have. We don't play that marketplace. First of all, our investments are illiquid, meaning the money is in, it stays in, and it works until the deal is done, right? 5-6 years.
Yeah.
So the discussion I had with this guy Tom is illiquidity, right? Is it a positive or a negative, right? Well, it's both. If you're a knee-jerk reaction type investor who keeps on putting your money in and out, in and out, in and out, then you're going to be the typical investor who has made like 2 or 3% on their portfolio, which is the average, by the way, in the stock market, right? The investor over a 20-year look back. So it's an advantage to be illiquid and keep the money in because you can't keep on pulling it in and out. Now, the disadvantage is you don't have access to your money for 5, 6, 7 years, however long we're working the capital. So, it's a different mindset. It's a different investor DNA when they come in and they work with us.
I think it's great for a person who maybe, maybe have played the day trader game and maybe they don't like the volatility and the stress and the anxiety that comes with it. Maybe they don't like to see their their IRA or their stocks, bonds getting hit every few days, weeks, whatever it is, and just start sliding. Or they're not happy with the return they're getting on their low yields, whatever asset class they're investing in. They're looking for something more, because when you say numbers that are 15%, 16%, and whatever those numbers are, in some of these deals of the week, I mean, that sometimes can be shocking for people. Like, whoa, how are you getting those? Like the financial advisors are calling you saying, we're considering, we need to know what you got rather than what we have.
Yeah, it's that pocket listing mentality. Think about it. What do financial advisors have access to? Exactly the same thing that every other financial advisor has access to.
It's very true.
That's what they have.
Yeah.
Right? Yeah. And if you classify it as a pocket listing in stocks, it's insider trading and illegal, right?
Yeah, exactly.
However, right, we get a pocket listing for us.
Yeah.
Well, that's not inside trading. That's experience.
Exactly.
Which is why we can put, those kinds of targeted returns out there. So it's, it's legal, it's honest, it's ethical. It's been going on for decades.
That's true.
Some will, some won't.
So
it's okay. It's been a trip this past 10 days to see how this thing is beginning to get a lot more traction underneath it. Just because the message. I tell you what, this financial advisor said, Nate, that was powerful. Yeah. And I've heard this a lot from them. He said, "I love the story. It makes sense." And what he means by that is the simplicity of buying an underperforming asset, repositioning it, bad management out, good management in. Yeah. Bad tenants out, good tenants in, raise the rents to market value, do some repairs, little light landscaping, remarket the asset,
Yeah.
more NOI, more value, ride it for 5, 6, 7 years. He said that story is just right, is what
Yeah.
he said to me. And I'm like, dude, you're selling my fund for me. I don't even need to talk. You know what I mean?
And
So,
do you guys have conversations with different managers or brokers that are what's their thoughts on COVID and the market with COVID and how things are going?
yeah, no, look, they're waiting for the other shoe to drop. I mean, that's the underlining message, if you will, that I'm getting. There's so much contrarian information out there, right? Real estate is fantastic. Supply is down, demand is up, prices are at their highest point ever. The Federal Reserve is screaming and shouting for everybody to buy real estate.
Yeah.
And then you turn around and you say, well, unemployment is still at 6.9%. Foreclosures in the marketplace look like they're going to pop in Q1 because of the amount of, I got some statistics. It was something ridiculous like $586 billion is in a forbearance scenario right now.
Oh, geez. Yeah, that's a boatload.
Yeah. 28% of FHA mortgages are 90-day delinquent. And, nobody's paying attention to that. So it's like, the sky's falling, Chicken Little, and yet everybody still thinks the sun's shining,
Yeah.
So, my job is not to convince anybody of anything, right? Do whatever you want. I'm not here to convince you. I'm here to show you an options, right? You're all intelligent people. I say to them, you do what you will with the data and see where it lands.
Yeah.
So,
but also sometimes people are looking for a almost like an advisor. They don't know what to do. They're concerned.
Yeah.
What does Freedom Venture offer in regards to advisory or consultation, stuff like that?
Yeah. Wow, look at you asking me all the right questions this week. Huh? It's amazing.
I just want listen. These are sometimes the questions that people ask us on the other shows, and I know sometimes people are wondering like, well, this sounds good, but it might be too big for me, right? They might be thinking immediately, oh, this is too big. He just showed over 100 units. How am I going to be involved in that? And sometimes it just takes a little bit of encouragement to.
Look, investors own units or shares in our management company. And because they own units or shares in the management company, they own a prorated position in all of the assets inside the fund. It's that concept of if we all put in $1 million and there's 100 of us, well, that's $100 million, right?
Right.
And then we all benefit on the cash flow and share in the profits.
Power of numbers, right?
It's the power of numbers. But here's the thing. It's not for everyone. I spend more of my time convincing people not to invest with us than I do to invest with us.
Yeah.
I do. Because
right
here's a couple of reasons why. This is only for sincere and honest investors who understand the value of putting capital into a long-term commitment, right? 5, 6 years.
Right.
And relinquishing control. That takes maturity, right? Otherwise, it's it's a relationship that's based on a lack of clarity or expectancy of what's going on out there.
Yeah.
So if you're a new investor, this isn't for you. If you think you know more than the 40 plus years of experience on our side of the equation, with respect, this isn't for you, right? If you want to be on the phone once a week and want to know exactly what everything is going on all the time, this probably isn't for you either. Although we do have a fully compliant investor platform at Freedom Venture where an investor has their own specific account. They can go in there, and really take a look at what what their capital is doing and where it's working. So it's mature investing. It's not It's not wholesaling. It's not a single family flip. It's not a, it's not a 3-decker in East Boston.
Are you telling me I can't, double my money in 30 days or less? Is that what you're telling me?
You can if you deal in Yale, but yeah, sorry, dude. No, this is the real world. However, you can get aggressive, targeted double-digit returns. You can get consistent cash flow, right?
Absolutely.
Just look at what your capital is doing now.
Yeah.
Is it working as hard as you want it to? And if the answer to that is no, we can have a conversation. But if the answer, you believe that your capital is working at its maximum potential, 4%, 5%, 6%, whatever, then maybe we could have a conversation and show you some stuff,
Yeah. Good stuff. Well, that was definitely a good deal, and you guys got a lot of good stuff happening. You said you got 8 deals in a week. That's a good week.
Yeah,
that's a good day.
Yeah, eight deals in contract, brother.
That's
One
awesome.
day, Walter called me up and he goes, "We got 8 in contract." I'm like,
That's
"Okay."
That's all. Let's go.
We went over the financing on these deals today.
Yeah.
You ready for this?
I'm ready.
This is our mortgage commitment. 3.85%.
What? On commercial?
25 year note.
Okay.
On a 10-year term.
Okay.
Ridiculous.
That's not
ridiculous. 3.85%.
That's nice.
Well, again, it's track record, relationships, history.
Yeah. Wow.
Commitment, and it's a non-recourse loan.
Mm-hmm.
So all the boxes are ticked when you put these things together properly. It's good.
That's huge. It makes me when I think about the goodness and richness of capital that is in the United States. It makes me enjoy hearing these kinds of stories, because when I think about what's going on here, it is just on a whole nother level. It's just it's a 180, man. Yeah. It's completely like, good luck. There's not a lot of, if there's any capital in this society, it comes from the government, and it breeds a society of
entitlement.
Yeah. That's a good way to put it. Yeah. Entitlement. It's horrible. It really is. It stifles growth. It's horrible. It's really bad.
Well, that's what kind of like, I don't know if it actually did, but it got very close to bankrupting the Greek economy.
Yeah,
was the fact that I think it was something ridiculous, like 75% of the country worked for the government.
Yeah,
right?
That's exactly what goes on.
And then when they all, plus they could all retire at something ridiculous, like 45.
Yeah,
I think it was.
And then what are people doing with the rest of their life? It's backwards. It's definitely not productive. Yeah. Not productive.
No.
So hearing those types of terms and rates, I will say this on one front, the rate here on the commercial property that I just picked up, 1.8%. And then I tried to negotiate the 1.8. I said, "Can you do better?" He's like, "Yeah, we can go lower." But he said it like very passively, like, "Yeah, sure. It depends on how much, what we can do with the evaluation, the appraisal that comes back." So rate to them is not much of a big thing. It's like, yeah, no problem, because rates here are already like negative and, 0. So, but the flow of capital is a lot slower. It doesn't move as quickly.
Sure. Does your guy lend in the States?
I've asked him that same question. I'm like, will you lend abroad? They don't do that. Good luck.
Maybe they should. Maybe we should open up some international banking lines. Help these poor guys out.
If anything, Switzerland.
Yeah. Funny, right? Funny. Good stuff, man. Good stuff.
You got some good stuff planned for the weekend?
Yeah, every weekend. Going to build some Lego with the boys.
Oh, that's
Jefferson and I are into day 3 of Monopoly. We already wiped out Bennett. Now it's just me and Jeff left.
Are you playing the right way, though? Are you playing or are you just like...
Oh, no, I cheat.
You cheat?
No, I cheat like crazy. Right. Yeah, I steal money when they're not looking. No, of course we play the right way. Absolutely we do. Good stuff, man. Good stuff. What about you? What are you doing? Going to the beach?
Actually, no. Tomorrow I'm teaching a workshop. And then,
nice.
Yeah, I'm teaching a workshop tomorrow here. We'll socially distance ourselves. but I'm teaching a workshop, and then I'm just hanging out with the family. Yeah, it's really all I'm doing this weekend.
Good stuff.
That's about
Good
it.
stuff. All right, my brother.
All
Good,
right, man.
Good cash flow show.
Good cash flow show. We'll see you next time. Thanks everybody for watching and tuning in. We'll see you next week.